Welcome to another episode of Scouting for Growth, where we explore the dynamic intersections of innovation, technology, and finance. Today, we are thrilled to have a good friend of mine, Theodora Lau. Yes, Theo Lau, with us today, a visionary leader in fintech and a passionate advocate for innovation, inclusion, and equity. And if you listen to the Scouting for Growth, you will find another episode, a recording with Theo, as part of an event we were participating into during the COVID-19 period. So it was digital, and this was with Daniel Guzman. Theo is the founder of Unconventional Ventures, where she spearheads efforts to create an ecosystem that brings financial institutions, startups, and venture capitalists to meet the diverse needs of consumers, particularly older adults and the economy workers. Recognized as a leading voice in the fintech community, Theo has been named a LinkedIn top voice for economy and finance and a top influencer by numerous publications. Her work extends beyond advocacy. She actively mentors fintech startups and collaborates with industry leaders to drive meaningful change. Theo is also a prolific writer and speaker, co-hosting the Rhetoric podcast, where she delves into the intricacies of longevity and fintech innovations. In today's conversation, we will delve into the evolving landscape of fintech, exploring the challenges and opportunities that lie ahead. Partly since the past couple of years, fintech investments have gone down significantly. So, where should we focus our attention now? Theo will share her insight on fostering corporate startup collaboration, which is now called venture clienting. Yes, a topic that I cover myself too, leveraging technology for social good and building a more inclusive financial ecosystem. We will also touch on her recent work, including her books, Beyond Good and Metaverse Economy, which explore the future of finance and the role of technology in shaping it. Join Theo and me as we embark on this insightful journey. Let's now welcome Theo, a true pioneer in the world of fintech innovation. Hi, Theo. Thank you so much for joining me on Scouting for Growth.
Thank you so much for having me again, Sabine. It's been too long.
It's been too long. We're just saying, right? Probably 5 years last time we caught up. And so we need a lot of updates now.
We need to talk fast.
We need, the world has changed. And actually, I look forward to diving into your world of fintech innovation and where you're seeing the challenges to be and where the opportunity might be too. But before that, let's get to remind everyone who Theo Lau is. As a fintech influencer, a writer, right? We can see the book behind you, and a speaker, right, as well. So tell us, who are you? Where are you coming from? And where have you been? And where are you going? If I can ask all the 3 questions to set the scene.
Let's see. I'm still on planet Earth. That's a good thing. I think last time when we did this together, that was before any of the books came out. And so we had Beyond Good a couple of years ago, wrote that during COVID, talked about megatrends going on in the world and the role of fintech and financial services. Yeah. And then last year, Metaverse Economy came out looking at the building blocks for the future of the internet. And more importantly, what role do communities play in it? So as you mentioned, I also talk and I also host a podcast called One Vision. I write because I do have an opinion. I think a good way to summarize it is I'm a troublemaker. I cause troubles, I ask questions, and I ask more questions. That's me.
Well, we love asking questions. So I will be asking you a question, and maybe you are going to unpack some of my questions to actually help people really understand where we are in the fintech world. And I think it's quite a while since I talked to a fintech expert. I've been doing a lot of work in insurance technology recently. So let's get into the world of fintech and where has it been over the past 5 years, right? How do you see corporate startup collaboration going? I mean, I saw a recent post was it from Effie or Daniel, about the fact that there is a few challenges between fintech and corporates will not acquire the fintechs, for instance. Tell us, what is going on in your world?
Oh, so many things. It's funny if you look at it, it feels like a lot of things have changed. But then if you sit back and think about it, a lot of things have not changed. If you look at the world of fintech, right, it's about money movement. It's about how do we help people get from point A to point B. That's all there is. You go to a bank or you go to an online lender, you want to get a loan because you want to get a house. That's going from A to B. Or you want to save up for your children for your retirement. Again, that's A to B, right? It's either consumer or small business. So I think what's been fascinating to see is you see a whole lot more players in the space in the last few years. We've had obviously the super apps of the world is started in Asia, Southeast Asia, and LATAM. So is a lot of growth and a lot of opportunity using technology to help people get, again, from A to B, right? Get access to microloans, have a means to get insurance, microinsurance, have a means to save money, have a means to pay people. So that's been very, very fascinating. Another thing I got really excited about is different players coming into the space. So beyond super apps, you see the likes of Apple, for example, right? A couple of years ago, they came out with the Apple Card in the US, and
Yeah.
then they have the Apple Savings Bank. Now, a lot of people said, well, that's not interesting. Yeah, it's a credit card. It's a bank account. But if you look deeper inside, what they have been able to do, for example, the Apple Card, which initially was partnership with Goldman Sachs, um, it gives you ability to save up money, move it to somewhere, and it just keeps saving in the background. With the savings account, it was the same thing, and the interest rate was so much higher than a lot of the Main Street banks, and it prompted other banks to say, "Oh, wait a minute, maybe we should do something for consumers." So little things by little things, right? Like what they focus on, it gives us just a different way to save money, a different way to pay people. I remember when the savings account came out, I got so excited. I signed up for it right away. The experience was so easy. And my son at that time, he was like, "Oh, mommy, what is this?" And I said, "Oh, this is a Apple savings account. I am able to get, I think at that time, 4.75% of interest, which is a whole lot higher than most Main Street banks. And the kids are used to seeing me pay with Apple Pay and everything else. And so my son, he didn't even think. He was like, then what do people need a regular bank for? Right. So things like that, it's interesting. Yeah, it's not a huge innovation per se, but it's incremental changes that we see people doing. And then of course lately, well, not lately, but the last 2 years has been AI and everything. But what gets me really excited isn't the chat GPTs of the world and those, but how we apply it and how it can change how we do things. So, for example, how can we use that to help small business? How can we create a connection between financial institution and the people that they serve? I think those are more interesting use cases that I would love to see more.
Yeah. So interesting enough, it might be good to go into the regulation because, you said it would be great if they were able to, maybe not have any banks and go and use and put our money into this more, different type of lending or saving accounts, which are not owned by banks. Apple is not a bank, but could become a bank. And so, what does that mean from a term of regulation? Could we see that happen some days?
I don't know. That's an interesting question. But here's the thing, right? For a lot of people who are in the industry, they're very hung up on it's a bank, it's not a bank. It's for a consumer perspective, I need a means to move money. I need a means to save. I need a means to do X. From their perspective, they interface with Apple. They're not interfacing with Goldman Sachs in the back or, whichever bank that they might be riding on. And so that prompted the question, the whole, banking as a service question, which lately has been a cause for concern. I think the most important thing is making sure that consumers are protected. They're not exposed to predatory measures or practices, for lack of a better word. I'll give you an example. Buy now, pay later, right? It's a means for people who don't have access to regular credit, people who have a thin credit file, or immigrants, younger generation, what have you. Instead of using a credit card, they go use Klarna, Affirm, all these other players to purchase things. Now, there are two sides of it. One side say, well, this is not a normal way of getting credit. It would prompt people to spend more. Another way of thinking is saying, well, if they didn't have this, perhaps they would have incurred more interest. Perhaps they would have, been in a different financial situation. Now, I think from a consumer perspective, and as well as for those who are focused on consumer financial well-being, what we need to focus on is understand why consumers go a specific route that they do, but B, more importantly, is be responsible. I don't have a problem with buy now, pay later, or consumers going to different ways of getting credit. But what we do need to make sure we have is not just regulations, but also the tools to help consumers spend responsibly. Because the thing with buy now, pay later a lot of times is they don't need to pre-qualify credit. You can have multiple of these relationships, right? I can have 5 buy now, pay laters going on at the same time, but consumers don't have a means to keep track of them, know when they need to pay and how much. And that leads to very easily overspending. So with power comes responsibilities, right? So if we can provide the tool set at the same time when we provide them with the means of doing things, then I think it's good. And I think that's, to your point, that's where regulation comes in, is what do we do as an ecosystem, as an industry, making sure that we are doing what we need to do to protect not just the integrity of the ecosystem, the industry, but also the well-being of consumers.
Well, it's interesting what you're saying, because I hear that we need to have better financial literacy. So I hear financial literacy, but also earlier when you mentioned, and that comes to the consumer, but I also heard artificial intelligence, so AI literacy, which might go towards a corporate. So how do we deal with those 2 points around better literacy in the world we are entering right now?
I think we all need better information, more information. We need to be more informed on where we are from a financial well-being perspective. However, with that being said, I think it is really easy. And it's I would say sort of a bias thing, right? Many people, they would look at certain demographics. Let's say, if they happen to don't have a lot of savings, if they happen to have debt, then a lot of people's immediate reaction is, oh, they need to do better. They need to learn better. They must need financial education, perhaps, because they don't know how to manage their money. That's why they are in X position. And I don't think that's a good way of going about doing it, because we do need a lot more education. For example, kids, right? When you were in secondary school, before you even come out to the real world, you need to learn how to balance. You need to learn what are the tools at your disposal. You need to learn not to overspend, all of those things. Adults as well. But I don't think it is fair to equate someone's specific financial position and assume, oh, you must be financially illiterate. So I think that's one important point. With respect to AI, I think there was a lot of potential. I can't keep track of how many years we've been talking about needing some sort of a, CFO in your pocket, autopilot your finance. It's really hard to do. It's not easy to do. And I don't think we're there yet. Hopefully we will. But then that also brings out a different question around trust, right?
Yeah.
Do I trust the entity that is giving me the advice? Do I trust a faceless algorithm? How do I know that they're acting on my best interest? And for it to work, I need to expose all of my financial relationships to this particular tool. And it goes back to trust.
Yeah, and when you mentioned the example with Apple Pay and being able to get your saving at more than 4%, and I think it's high interest rate, right? Usually you can do that through really lean infrastructure and really highly technologically savvy environment. So, but at the same time, it is a trusted brand. So people say, but for sure, I will give my money to Apple, right? And probably more trusted than banks or insurance companies we have today within our financial services environment. People, when we look at the rating, often banks and insurance companies are not the most like financial institutions or institutions overall on the list of the liked entities out there. So,
yeah.
Right. And so when you let's talk about more exciting things. So when you look at the trends, right, in fintech that are potentially impacting us, and I know you love anything related to inclusive society, what excites you from a trend viewpoint and a technology viewpoint as well, Theo?
What excites me? I love anything to do with tech and how you can use technology for good. I think we're in a similar boat. What is really interesting to see is to see people moving around and then bringing their expertise to different places and creating new solutions, right? So, for example, one of the ones that we recently talked about is a company called Pomelo. Pomelo is a fintech company based in the Philippines. And what they do is they extend services to people who live in the US who need to send money back to their family in the Philippines. Now, the traditional way of doing it, you'll be going to one of those big companies that's been around for a long time and do remittance payments. Problem with a lot of times is that it takes time and it's not cheap to do, right? And so what they have done is they created a credit card solution. And so if you're in the US, you can use your credit card. And a lot of times those are immigrants with very thin credit file. By using their credit card, you can send the money to Philippines to a family right away, goes straight into Gcash, which is brilliant. That's the mobile wallet that they use in the Philippines. And at the same time, because you're using a credit product in the US, that helps you build up your credit profile. So it kills two birds with one stone. They call it the send now, pay later. And that is an amazing, right? So using existing products, credit card has been around for a long time, but rethinking how you can use that to serve a demographics that's underserved. So that's fascinating. I love solutions like that. Is how can we be creative? We don't need to send people to the moon. We have a lot of things and tools at our disposal already. I think what it comes down to is empathy, lived experiences, right? Can you use that and bring it together to serve more people? And that's what gets me excited.
Yeah, inclusive society means empathy and bringing that, I guess, human touch to others who might not have access to credit, but then they would love to build credit, right? Not everybody have the same opportunities, and partly enabling these underserved consumers to also be able to consume, because then bigger GDP means everybody participate to create wealth, but also create better economies for everybody. What do you think are still the challenges we are facing to actually preserve that human touch you actually just mentioned, that ability to care for the underserved market? We call it the protection gap in insurance. We have a 1.8 trillion protection gap. And so we also need to build the insurance product of the future. We have a massive emerging risk, which is uncovered. And so we need to make the product more affordable and also easy to understand for those underserved market segment. And that's where you probably saw over the past 5 years, we learned from embedded finance. We also have now embedded insurance, but it took us a bit of while to get there.
Yeah. I think two industries have a lot more that are similar, right? Than they're different. And I like that because at the end of the day, I think the end goal, regardless of if you're insurtech, fintech, a bank or insurance company, is you want to create a model that is sustainable from the viewpoint that your company will still be around and the audience that are getting the products and services from you guys will still be around, right? Because then that is a win-win situation. So the question is, how do we bring them from where they are, recognizing their need, satisfying that need, and to preserve their future security, for lack of better words? And it's a huge question because if you look at the challenges that we face today, right? Interest rate has been fairly high. Although I would argue that it's not as high as I remembered when, I don't know, back in the 90s, my mortgage was almost 11%, which is right now, I think is 7. So we have had really high periods of interest rates. But then, the way that we work is also different now, right? We have a lot more gig work. We have different options of people wanting to work in a different way. But at the same time, inflation is creating a different pressure on consumers. There was a recent report that I read that was talking about credit card debt has been really, really high, is going up in a trend in a direction that is not good. At the same time, student loan debt for people that are older than 55 is also becoming very substantial. So when you add both of those trends together, and you think about people that are getting older, probably how much money they can earn, their earning power is going down, whereas the debt is sustainably high. Then the question becomes, what can we do as a society as well as an industry to help people not just pay off the debt, but find ways to create a little bit of a cushion for the future? Because US we don't have a pension system, unlike, other countries in Europe. And a lot of people rely on Social Security, where the fund is actually going to be insolvent in 10 years. What are we going to do, right? We're living longer. We have a substantial amount of financial pressure. So I think it presents challenge, but also opportunity for us to rethink how can we help people get to a more stable financial future. I think that is the opportunity for both insurance and fintech alike.
Yeah. And, sometimes I do think that the industry called insurance, started from a mutual. It was about helping people cover and, de-risk anything which surround them. And it's why I find my industry really fascinating, because I often say to young people, insurance, you tell me insurance is boring. No, insurance is not boring. Think about it, about risk prevention, risk mitigation, risk transfer for everything which surrounds you in life. So if you like fashion, look at risk transfer, risk mitigation, risk, prevention from a fashion viewpoint. Think about fashion tech. The whole world of fashion is changing. If you like, construction, you could do the same. If you like payment, we need payment. We need to analyze new payment system and the risk new payment system could create in the world. So it's about mutuality. It's about driving value for others. And I hope as an industry, we start marketing that a little better, not greenwashing, but actually do the right thing in, bring the product that, people need out there. I would like to shift our conversation to some of the founders we work with every day. And, women investment, investing in women founders has always been tricky for years. And you mentioned high interest rate, high inflation, high cost of capital. Not only the normal founders found it difficult to get funding over the past year, at least the past 2 years. I think I can see numbers recovering right now, but in particular female founders. So what can we do to reduce the barrier for women founders to receive investment? Is there some tips you can provide? And, how do we promote more, equity, inclusion when we look at these things as well?
Oh, I think this is the point when we should have had our conversation over cocktails, Sabine. um, it's a tough question. It is something that it depends on the day when you ask me. Some days I'll be like, yes, we can push forward. And some other days I'll be like, I'm done with this. It's death by 1,000 cuts. If you look at where we are this year, in particular to founders from underrepresented demographics, it is the lowest we've had for the past few years. Now, we don't lack reports on why it makes sense to invest in women founders. We don't lack statistics on why we need to invest in diverse entrepreneurs. What we lack is the intention of doing what's right. And that is not an easy problem to solve. What we also lack is a supportive infrastructure to support people who don't have access to a lot of these things, who don't have access to a network of wealthy previous founders who can afford to invest in future founders. We don't have an adequate caregiving infrastructure to support women who are, mid-career, who have to take time off to take care of their parents and their children. And when they take a break, they take a substantial hit on their finances. We also don't have a good enough infrastructure to support people and women who are getting older. I mean, the whole question around menopause is real. And it's fascinating as a topic that I started paying more attention because I turned 50 last year. And so now you're looking at, wait a minute, some women, they do go through different periods of challenges, right? Some have to take time off. Some actually have to take a long extended break. All of these have an impact on their long-term financial security. And so when you add all of these things together, that's why I talk about, death by 1,000 cuts. One thing doesn't create a substantial impact, but when you add all of these together, it impacts the ability to bring more women up to executive level. It impacts the accumulated wealth that women have. It impacts the opportunities that they have access to, and it impacts what they would choose to do. Perhaps I wouldn't say it's a choice, actually. If they need to step back to take care of their family, it's something that, we do. I wouldn't say a lot of people actively choose a job that pays them less, right? So all of these create pressure.
Yeah, pressure.
Now, what does give me hope is I see the likes of Melinda Gates that are, actively putting their wealth and investing in areas that, to help promote equity. So that's hopeful. But I think we need more than that, right? We need collective actions, and we need collective actions, not just from women pushing for women, but everyone. Because if you think about it, there are so many things that need to be done in the world, and you can't rely on just half of the demographics to solve it. That's just silly. You need everyone. So I hope it will change, but I think change will take a lot of time. Now, with that being said, I do want to end in not a too somber, tone, because there are indeed more women that have opportunities to have a seat at the table, right? So that's helpful, but I think that change will take years to come.
So if you had a few advice, takeaways you could give to my listeners, for sure we'll tell them to make sure to buy the two books, right? The Metaverse Economy and Beyond Good. two amazing books you have actually produced, and I'm sure there is another one in the engine room at some point coming out soon. What would be the top tip you would give them to actually participate to this environment where we have a lot of underserved? We have a changing fintech world, we have a changing tech world, insurance as well. And then we have groups which are less fortunate. How can we create a bit more awareness around the things we could do to help everybody?
Oh, that's a big question. I would say don't apologize. We like to apologize a lot. We like to, I think, oh, sorry, yeah, I don't mean to do that. Oops, yes, go ahead, please speak up. I do that. I do that all the time. And I don't know if this is like because I went to an all-girls Catholic school for 12 years when I was little, or, it's just like how the families always bring us up is, keep your heads down, don't make a wave, and just, eventually someone will notice you're doing good. I would say don't apologize. Have a voice. I think having a voice is so important. And that's the one thing I'm the most grateful for, because we all have opinion. We all have opinion about something, but that doesn't mean that we have a platform to voice our opinion. And that doesn't also mean that, we actually will say something and someone will listen. But I say, go for it. Just go for it. Things won't always work out right, but you never know unless you try, right? So if I look back at what I've done in the last 30 years, I started out as engineering, right? It was chemical engineering, it has nothing to do with the one I'm doing right now. I spent 20 years building tech. I was in IT and telco. Again, nothing to do with what I'm doing right now, but there's a lot of similarity between telecom and finance. And then as luck would have it, I ended up in nonprofit, which is where I met you and Danielle, and start looking at, oh, wait, there's massive opportunity of something that, that needs to get done. We need to look at the well-being of people as we get older. We need to look at the well-being of people in general who don't have a voice at the table. What can we do? And so lead from your heart. Always lead from your heart. Listen to yourself. And things are going to get tough, but you know what?
Get better.
If you are clear about what drives you, right? Was your raison d'être? That will keep you going.
Yeah.
It's not going to be pretty every day, but it'll be fine.
Yeah. Let's make sure we all keep our raison d'être and keep pushing and learning from our strengths and failures. At the end of the day, it's all about lesson learned. Theo,
Yes.
thank you so much for joining me on Scouting for Growth. That was an honor to welcome you today.
Thank you so much for having me again.
I hope you enjoyed this episode of Scouting for Growth. Please subscribe, share with friends, and leave a 5-star rating. Your rating is so valuable. I review all of them, and my team help me adapt content to meet your needs. Also, connect with me on my preferred channels. I am a B2B growth expert, so you will find me on LinkedIn, Instagram, and Threads, and X as well as Blue Sky. All information available below. Until next, keep scouting for growth.